The world's sixth largest country, Australia, with beaches and kangaroos, and apparently a whole lot of money, is struggling. Yes, it's difficult to believe, as not too long ago, Australians were basically swimming in cash. They were called the wealthiest in the Global Wealth Report 2022. But things have taken a turn. So what's really going on with the Aussie economy? We'll figure out what's been happening, why things are changing, and find some answers. Stay tuned till the end. If we see, historically, Australia has been a powerhouse. By the late 1800s, its incomes surpassed even those of the US. Prosperity continued through the 1950s, 60s, and 90s, largely driven by resource extraction, iron ore, coal, and natural gas. By 2023, Australia exported about 895 million tons of iron ore, representing 56% of the global seaborne trade and valued at 110 billion Australian dollars. This resource-driven growth has long been a pillar of Australia's economic success. The early 2000s saw one of Australia's biggest mining booms, fueled by a surge in global demand, especially from China. China's rapid industrialization increased its demand for raw materials, causing Australian iron ore exports to skyrocket from 88 million tons in 2000 to over 700 million tons by 2014. This boom significantly boosted living standards. By 2013, real per capita household disposable income had risen by 13%, real wages by 6%, and unemployment had dropped by about 1.25 percentage points. However, not everyone benefited equally. The mining boom caused the Australian dollar to appreciate, impacting other industries. Manufacturing faced mixed outcomes. Engineering firms supplying the mining sector thrived, but import-competing industries like textiles and footwear struggled due to higher exchange rates. Australia emerged relatively unscathed from the 2008 global financial crisis, thanks to the strength of the mining boom. The timing was fortunate, as other economies were reeling from the crisis. Historically, Australia's resource booms attracted many people, many of whom stayed long after the boom ended. The recent mining boom similarly led to significant migration flows, especially in education and skilled labor. For decades, Australia has seen mineral booms in iron ore, coal, and gas, driven by Asian demand. While the resource curse often affects resource-rich nations, Australia has managed to avoid this trap. Strong regulatory frameworks and transparent processes have helped Australia manage its resource wealth responsibly. The country has avoided the corruption and instability often seen in other resource-rich nations. Australia also benefits from a diversified economy, including agriculture, manufacturing, and services, which help balance growth. Immigration has played a crucial role. Since the late 1990s, temporary migration surged, with many arriving on student or work visas. Although immigration policies tightened in 2018, population growth remains a key driver of the economy, contributing to an annual growth rate of 3 to 4%. Unlike most developed nations with slow population growth, Australia's population has surged by nearly 45% since 1991, driven primarily by immigration. This growth, not high fertility rates, has been central to Australia's economic success. Despite these strengths, Australia faces significant challenges today. Rising inequality, a housing affordability crisis, and stagnant productivity are pressing issues. These problems stem from past policies and require urgent attention to ensure a sustainable future. The housing market, in particular, is a major concern. There aren't enough homes, and existing ones are increasingly unaffordable. First-time buyers struggle without substantial incomes or financial support from families. The shortage of housing has been a problem for over 20 years, with major cities like Sydney and Melbourne experiencing extreme price hikes. To put this in perspective, buying an average home in Sydney requires a family income of about $280,000 annually, while the average income is only $120,000. This severe imbalance between supply and demand has driven up housing costs. Australia's housing crisis is long-standing. The number of homes for sale has been declining since 2015, and rental availability has tightened since early 2020. In 2023, only 170,000 new homes were completed, the lowest in a decade. This trend has worsened since the 1960s. With most of its population living within 50 kilometers of the coast, major cities like Sydney, Melbourne, Brisbane, and Perth face significant urban sprawl. This expansion increases the demand for infrastructure, roads, public transport, utilities, and particularly housing. High-income ownership rates reflect this fascination, but now affordability has become a major issue. House prices have soared relative to incomes, a trend mirrored globally. Multiple factors contribute to this resilience in housing prices. First one is increased demand. Australia's population has surged by over 30% in the last 2 decades, driven by high net immigration rates. In 2023, Australia welcomed nearly 720,000 new residents, adding pressure to the housing market. Next factor is high construction costs. The Producer Price Index for construction has risen by 30% since 2021, making building more expensive and leading to a decrease in construction firms. Over 1,500 companies have collapsed due to cost overruns. Another factor is planning restrictions. Local councils' planning rules, particularly in cities like Sydney, impose significant development restrictions, which further drive up prices. Australia's housing market resembles a pyramid scheme, with property values reaching 9 trillion Australian dollars, more than 4 times the GDP. This structure is fragile and risky, creating a narrow base of real prosperity while exposing the economy to volatile commodity cycles. The focus on mining wealth and housing, while lucrative, masks deeper structural issues and fails to diversify the economy. Cultural preferences for suburban living over urbanization contribute to the problem. Major cities are much less densely populated than global counterparts like London and Paris. The slow approval process for new home developments due to government bureaucracy only exacerbates the issue. Australia is isolated, with a small population spread thinly along its coasts. This isolation results in high transportation costs, as 98% of trade by volume relies on maritime logistics. Shipping goods to distant markets like the US and Europe is more expensive and time-consuming. Australia isn't part of a dense economic region like Europe or North America, limiting regional trade. Its main trading partners, such as China and Japan, are far away, and that affects business costs. Despite its isolation, Australia generates significant wealth from exporting iron ore, coal, oil, and gas. However, the country has struggled with diversification. It remains heavily reliant on low-complexity exports like mining and agriculture. Although Australia is the 13th largest economy, it ranks poorly in economic complexity, falling from 57th to 82nd from 1995 to 2021. Economic complexity is crucial for producing unique, high-value products and adapting to technological changes. Australia's lack of complexity makes it vulnerable to economic shifts. Australia's dependence on iron ore, especially with its main customer China, presents a geopolitical risk. Despite tensions, China hasn't targeted iron ore exports due to a lack of substitutes. For Australia, low productivity growth is at the heart of these issues. A country's ability to improve its standard of living relies heavily on its ability to increase output per worker. Unfortunately, Australia's productivity has been stagnant for decades, meaning the economy struggles to maximize the efficiency of its inputs. This lack of productivity growth is hindering broader economic performance and highlights the need for a more dynamic business environment. In this context, dynamic refers to how businesses adapt and evolve. Essential elements like innovation, risk-taking, and skills development drive productivity and competitiveness. However, Australia has been lagging in these areas. According to the IMD World Competitiveness Rankings, Australia ranks 61st out of 63 countries in entrepreneurship and has seen its workplace productivity drop from 20th to 41st. Challenges include poor performance in business efficiency metrics like remuneration, employee training, and international experience. Consequently, Australian businesses are struggling to find and retain skilled labor. A critical issue exacerbating Australia's economic woes is stagnant wages. While wages have technically been rising, the reality is that inflation has been outpacing these increases, making it harder for Australians to afford the basics. Over the past 3 years, wages adjusted for inflation have actually been falling, leaving the average Australian with the same real income they had in 2009. This has resulted in a lost decade and a half of progress in living standards, costing Australians tens of thousands of dollars in potential earnings. Productivity, which should drive wage growth, has been weak in Australia for the last 20 years. In 2022, productivity fell by about 4%, as output failed to keep pace with a 6.9% increase in working hours. Despite this, Australian companies are underinvesting in research and development, with spending far lower than in other advanced economies. This lack of investment further hinders the country's ability to innovate and improve productivity, perpetuating the cycle of stagnant wages. Stagnant productivity also deepens income inequality. Although Australia's Gini coefficient for income inequality is comparable to other developed nations, wealth inequality is more pronounced. Nearly half of Australia's wealth is held by the top 10% of households, who possess 15 times the wealth of the lowest 60%. This disparity has led to a concentration of economic gains among the wealthy, with 93% of the benefits from the past decade going to the top 10%, leaving the majority with just 7%. Cost of living is now at the forefront of every Australian's mind, as the country faces one of the worst economic squeezes in its history. Like the United Kingdom, Australia is experiencing a drop in wages and living standards, coupled with a severe housing affordability crisis. Sydney, Australia's largest city, ranks as the second most unaffordable city in the world, with Melbourne and Adelaide also among the top 10. For many Australians, especially first-time homebuyers, owning a home is becoming an unattainable dream. Unfortunately, the outlook remains bleak. Even by 2028, real wages are projected to be the same as they were in 2014, and unless they grow faster than they did before the pandemic, the gap in living standards could persist well into the 2030s. As inequality grows, economic growth is hampered. Wealthier individuals often invest in financial markets and real estate rather than contributing to job creation or new business ventures. Meanwhile, those with lower incomes lack access to quality education and opportunities for economic advancement. Australia's issues with housing affordability and inequality are long-standing and have been overlooked by successive governments. A comprehensive policy change and cross-party collaboration are required to address these problems. Without significant reform, these challenges are likely to persist and continue affecting Australia's economic stability and growth. If you enjoyed the video, please give it a thumbs up and remember to subscribe and hit the bell icon. Stay tuned for another video.